Guys, there is another analysis on EURUSD for this upcoming week. Last week, we conducted an analysis on EURUSD and our price will. It had a successful almost 200 pips move. One of the reasons why I explained that, apart from the technicals on EURUSD, another add-on factor is that the dollar index was pretty bullish last week, and I was expecting the price on dollar to rise. And with that strength, you would expect the EURUSD price to melt and move in opposite direction. And that's exactly what happened. That was the EURUSD analysis last week. We had ABCD formation, price rejected nearly at 61.8 Fibonacci's. And that was shared on the 5th of March. We're expecting the price to retrace a little before it continues going down, and our direction for the trade was to sell. So you'll be expecting the price to make a low-high formation before you take advantage, and your target will be anticipation low formations. As you can see that the price retraces a little on if you could see that retracement on that wick on a smaller time frames, and then it carries on. And one of the factors were ECB, of course, where Draghi has significantly impacted the market, and we had that target as achieved for more than 200 pips. So now, what do we see this week? And that's where we are. So let's have a look and try and understand how do we approach this week. We had a sharp move last week, 200 pips. Should I still be looking for selling opportunities, or are we expecting the price to retrace on it? Should I be taking retracement trade first? And all these questions. Well, let's consider the charts now. Here is a monthly chart. So far, you are in a bearish market since the 1st of May last year. Price has forming a low formations and low high formations. As you can see, moving average cross was in on the 1st October last year. Again, confirms the momentum to the downside. Then you had a huge engulfing candlestick, which is a controlling factor at the moment. The retracement, this is merely a retracement within this controlling candlesticks, and I will be expecting the price to form a new low. That's what my expectation is. So the expectation is that's how the price has been forming. That's a low it has formed previously. Price retraces, forms a low high. Pretty much it has breached last week, and I'm expecting the price to make a clear low high formation to these weekly levels at 1.10. That's what my expectation is. Pretty attractive level, and we'll see how this plays out. This is the picture on these higher time frames. So let's try and break it down on the smaller time frames to establish a trading plan for this week, which is starting from tomorrow. We went on to, this is the weekly chart. As you can see, last week, huge engulfing candlesticks. The week before, price rejected from the moving averages, nice shooting star formation. As you can see, this hammer engulfing candlestick, which engulfs the hammer, is only merely a retracement. These three candlesticks are barely retracements, and the controlling factor is this candlestick, engulfing candlestick. So had these retracement candlesticks would have breached this candlestick, the circumstances, the environment would have changed because they failed to break this candlestick. Hence, we would say definitively that sellers are in control at the moment, and exactly that's what happened. Bit of retracement, another leg of sellers. Now, how do we see this? As long as the price remains below this level, below this candlestick, and fails to break this prior week candlestick, you would be expecting the price to carry on to the downside. So sellers are in control. And yes, you can expect the price to retrace first. And what is the reason for it that I can see? One of the factors are this wick rejections tells us that on Friday, the buyers enter the market. They're not enough, of course. I would expect the buyers in the first half of the week to retrace the price higher. That's what my expectation is. Retrace the price higher, and then If the sellers enter within the week, then I'm expecting the price to carry on to 1.1125. That's what the first target is. And ultimate target is at 1.10. So as long price remains below this, we are pretty certain that, yes, that the price is likely to carry on to the downside. So let's mark this. Now, do we have a chart pattern here? I've always shared the chart patterns, as you can see, and always discuss this. You can see there is a pole and there was placement. I call it a flag. So there is a chart formation. So we are in that business. You can see how beautifully the price breached that bearish flag, retraces right to the teeth, continues higher. That is the move we are already in. So this pattern is pretty much already there, and price already has begun movement on this since last week. And try and understand this continuation pattern, bullish with bearish flags, learn on them. And very attractive, very important practice, and it adds confidence, confluences to your trading if you focus on them. Do we see something else? Let's have a look. And has there a significant pattern? Yes, we do have another formation here. We have a head and shoulder formation. That's your head, that's your right shoulder, that's your left shoulder, and that was the neckline. Now we have a breach of that neckline, and that is the first time we had a breach of this neckline. Price fails to break here, price fails to break here, fails to break here. But what happened here? We got the close below that level. So the head and shoulder formation is active now. As what is the target for this head and shoulder? As you can see, these are the targets for this head and shoulder formation. So a head and shoulder formation. So you've got already a formation in play, which is your bullish flag formation already, as you can see, and there is another formation which has been activated, another pattern, chart pattern formation, which is in head and shoulder. It has been active last week because we got a neckline breach. I'm expecting the price to continue after making a low high formation and pretty much complete this pattern, which is in line with the pattern targets, in which the target is right in there. So you've got, utilize your chart patterns into your analysis, establish the confluences, and you'd always be able to understand and see the high probable trading set. You've got a head and shoulder formation. Let's try and understand if there's any Fibonacci's there. This is the move, course of retracement. Do we have a Fibonacci on it? Price rejected from 38.2 here. Can you see it? Price rejected there, which is, and I said in my previous lecture that 38.2, if the price rejects from there in the continuation move, you would be expecting a sharp move in the continuation direction. And that's exactly precisely what happened. As you can see, the price rejected from 38.2 there. Price retraces quickly to the downside, retraces again, 38.2, taps on it, rejected again. And this time, the price forms a lower high formation, shooting star at 23.6. So as you can see, what I'm expecting is price to carry on. So you've got Fibonacci's in play, you've got a head and shoulder formation in play, you've got a bearish flag formation in play, and you can see the price action is extremely bearish on this. And we know where and we do know where the sellers are, at what level the sellers will be in control, and what the buyers had to achieve to get override the sellers. And that's what this line upmarked here is, which is this. So pretty clear. So let's break down onto the daily chart and try to precise the trading plan. Here we are onto the daily chart in front of you. Nice ABCD formation last week. I did explain in my previous video. Beautiful formation. And well, I would be expecting the price to retrace on this, and then carries on. That's my analysis, is retracement and continuation. So in the first half of the week, I could expect a retracement. I'll explain you why. And in the second half, the main move is always this bearish move. Look for a low high formation and take a sell trade. I would not suggest taking these retracements. Seeing the momentum from the higher time frames, my personal view is that you specifically focus on that low high formation to take advantage for a new low formation. Now, that's my analysis. I'll break it down onto H4 to give you some significant levels that you could focus on. Significant areas there. I would be expecting the price to retrace to these levels, continue down. Or it can do a deeper retracement, which is pretty unlikely in my view. Seeing the momentum, seeing the price action, seeing the higher time frames and all that, I would be expecting the price to retrace up to these levels at maximum before the price forms a low high formation to go to the downside. Now, your task as a trader is to look for the low high formation to take advantage. How to ascertain the low high formation? You can use your strategies, the methods that you use for that purpose. These videos are giving you a top bottom analysis and directional bias in my view, and the level of invalidation. Use these analysis in line with your own method of trading strategies and your analysis to get a better understanding of these charts. Now, that was the EURUSD analysis, guys. I can see I'm expecting the price to retrace a little before it continues going down. I've set out the reasons. As I said, the price action, you've got a head and shoulder formation, you've got the bearish flag in action, you've got a bearish trendy market, market with the trend, a price forms low high formations, and all this. Now, let's quickly glance on the dollar index. I would not go into detail on this, but on the dollar index, we had a successful move last week. I had shared this analysis, if you remember, last week. And I said the dollar will retrace a little before it continues going higher. And you can see how dollar retraces first, and then it went higher, specifically to the teeth. So what do I see now? I'm expecting the dollar, and I'll be brief on this. The analysis, I'll be brief on this analysis. I'm expecting the price to retrace first. Yes, retracement before it continues higher. And I am expecting the price this time to take out these low highs. It will be very interesting. It's a fourth tap of the price. There is a significant momentum with the price. As you can see, we got a morning star formation here. I'm expecting a slight retracement on this before price continues going higher. With this move, I'm expecting on that retracement on dollar, I'm expecting retracement on EURUSD. And when the price starts rising on the dollar, that's where I'm expecting EURUSD to have that major move, which I've discussed, to the downside. So that's where what the analysis is. utilize these analysis in line with your strategies with the method that you use to trade. I'm sure these videos will help you to be a better trader, to understand the price action more effectively. Thank you very much.